Hey guys, how are we doing today? So, I have started an interesting experiment here. One of my closest friends is actually taking part in CIMA, which is the Chartered Institute of. Let's move up here before I get started. But yeah, so as I was mentioning before, one of my friends are kind of doing CIMA at the moment to get a deeper understanding of how finances work. So I think the abbreviation for CIMA is Chartered Institute of Management Accountants, and it is a globally recognized qualification that is designed to develop skills in management accounting. So you gain the ability to analyze, strategize, and drive business performance, right? So we have the upgraded ChatGPT 4.5 here, who we are going to use mainly alongside Grok 3. So what I have done is kind of ask ChatGPT and Grok both what is taught. So there's a spelling mistake there. What is taught in a course like CIMA, and what like AI could teach me about it. So I've gone through the process of kind of the breakdown of what CIMA offers. So it kind of consists of three main levels. So operational level number one, management level number two, and strategic level, which is your number three. And each level includes subjects. So enterprise, which is E, performance P, financial F. And then additional to that, there's an overarching case study exam at each level designed to apply your knowledge practically, right? And so there's a breakdown of what we would kind of learn in detail. So I've read through that, and what I have asked ChatGPT and Grok as well on the other side, but ChatGPT mainly, is what ChatGPT can teach me that I can learn through AI for this course without actually taking the course, right? So we have a breakdown of topics. So here's now topic number one: financial accounting fundamentals, understanding financial statements, accounting ratios and interpretation, IFRS and GAAP essentials. And topic B is management accounting techniques, so cost volume profit analysis, budgeting and forecasting, variance analysis and performance measurements, investment decision making, MPV and IRR. And C is your strategic and operational management, so SWOT, PESTEL analysis, strategic thinking and planning frameworks, business ethics, sustainability and corporate governance, digital business transformation concepts. And topic D is risk and financial management, so identifying and mitigating business risks, financial risk management, FX and interest rates, raising finance, debt and equity, financial planning, mergers, acquisitions, and business valuations, right? So, and these are the skills that kind of help, like AI would help me develop. So, ability to make informed decisions based on financial data, advanced analytical skills to understand business performance, strategic thinking skills to drive business growth, understanding risk management and its importance in decision making, right? And here's how we can proceed. So I can provide you detailed lessons, examples, exercises, and practical scenarios tailored specifically for you. So interactive personalized lessons, practical exercises and solutions, real world examples from actual business cases, and detailed explanations. So simplifying complex topics step by step. So what we are going to do in this video is kind of jump into that first topic from this list of topics that ChatGPT has provided, so that we kind of gain a better understanding of how finance works, right? So number one we're going to do is understanding financial statements. So this is going to be the first video of many where we kind of break down each of these topics. I am personally going to use this as something that I'm going to learn alongside you guys. So if you would like to join this learning session. So like and subscribe, and we will get on with more videos. So what I have done is, starting here, let's start with a financial accounting fundamentals. So that's your main overarching topic, and understanding financial statements as our first lesson, right? And I've done the same with Grok here. So we'll see how the two kind of give us details. And yeah, so let's get started with ChatGPT first. Lesson number 1: Understanding financial statements. Objectives of this lesson. After completing this lesson, you'll be able to explain what financial statements are and why they are important, understand the 3 primary financial statements, which are balance sheets. So this is a statement of financial position. Income statements, which is your profit and loss statement. Cash flow statement. And finally, interpret what each financial statement reveals about a business. So let's get on to the introduction. What are financial statements? Financial statements are structured reports that summarize a company's financial activities and health at a specific point in time or over a period. They help stakeholders, which are your owners, investors, creditors, the management, and analysts, to make informed decisions. The 3 primary financial statements are the statement balance sheet. So the question that it answers, the question that it answers is, what does the company own and owe? And the main purpose of it is it shows the financial position at a given date. Income statement. This answers the question, is the company making money or losing money? And the main purpose is it shows profitability over a period. The cash flow statement. Where is the cash coming from and going? So the main purpose is that it tracks actual cash inflows and outflows. So moving on to the balance sheet, which is our first topic. The statement of financial position. What is the purpose? Shows a company's financial position, so assets, liabilities, and equity, at a specific date. Here's the structure. Assets. Items a company owns, such as cash, inventory, or property. Liabilities. These are your debts or obligations, so loans and stuff that are payable. The payables. Equity. Owners claim on assets after liabilities are deducted. So the fundamental equation that ChatGPT has provided here is assets equals liabilities plus equity. That's the easiest way to kind of understand things, right? So we have an example here. So on the left, we have our assets, which are cash in $15,000, inventory, which is $10,000, property, plant, and equipment, which is $50,000. So your total assets are $75,000. And on the right, we have liabilities and equity. The accounts payable is $5,000, bank loans is $10,000, and the total liability is $15,000. So when you submit that equation, the equity is also $60,000, right? So when you submit that equation, assets equals liabilities plus equity, everything's balanced, right? So assets 75,000, liabilities is 15,000, and our equity is 60,000. The income statement, which is your profit and loss statement. What is the purpose? Reflects company's profitability over a specified period, such as a month, a quarter, or a year. The structure. There is your revenues, which is sales income, cost of goods sold, so COGS, which is cost directly associated with sales, the gross profit, which is revenue minus COGS, operating expenses, so your rent, salaries, utilities, etc., and the net profit, which is your income. the gross profit minus operating expenses, right? So here's an example again. The income statement is revenue $100,000, cost of goods sold is $40,000, the gross profit is $60,000, and the operating expenses is $30,000, which ends up with a net profit of $30,000. The cash flow statement shows the actual inflows and outflows of cash, indicates how well the company manages liquidity. So the three key sections of this statement is operating activities, which is cash from normal business operations such as sales and expenses, investing activities, which is cash from buying, selling assets, so equipment and property, financing activities, which is cash from borrowing, repaying debts, issuing shares, and dividends. For example, of a cash flow statement, operating activities, cash received from customers, $80,000, cash paid to suppliers and employees, $50,000, net cash from the operations is $30,000. Investing activity, purchase of equipment, $10,000, net cash from investing, $10,000. Financing activities, loan received, $5,000, dividends paid, $5,000, net cash from financing, 0. So the net increase in cash here is $20,000. And now we go to a quick exercise, which is an interactive check. So consider the simplified example below. Assets 12,000, liabilities 7,000. What is the equity? Right? So if you apply that same equation from top, which is assets equals liabilities plus equity, we have assets of 12,000, liabilities of 7,000, and our equity. So to find equity, you subtract 7,000 from 12,000, which gives you 5,000, which is your equity, right? And here is an example of a real world application. So this is one of my stores that I opened through Shopify, which unfortunately was not profitable, but was a good learning experience. So imagine your Shopify store, Rejuva Bright, made sales of $5,000 last month. You paid $2,000 for inventory and COGS, and your store expenses, Shopify subscriptions, ads, and apps totaled $1,500. So here is the income statement for Rejuva Bright for last month. Items, and so under items, revenue $5,000, the cost of goods $2,000, the gross profit is $3,000, and the expenses is $1,500, which gives a net profit of $1,500. The simple statement immediately shows profitability and highlights areas for potential cost saving or revenue increasing strategies. And finally, we have a summary and takeaways. Balance sheet, snapshot of assets, liabilities, and equity at a specific point in time. Income statement, profitability, so your revenues, expenses, and profit loss over a specific period. And finally, the cash flow statement. Actual cash inflows and outflows categorized into operating, investing, and financial activities. Understanding these financial statements provide clarity on business health, aids informed decision making, and is essential for investing, business management, and strategic planning. So ChatGPT has provided a few next steps. So if you'd like another example or exercise, you could probably ask it. If you're ready to proceed to the next topic, which is accounting ratios and interpretations, you could do that. And also, if you have any specific questions or requests about financial statements, you could also ask that. So I think this is like a key advantage of AI is the fact that you can learn at your own pace. You can ask unlimited questions, and you don't feel the pressure of keeping up with a certain timeline, such as the traditional systems we have nowadays. So I think it's a great tool for expanding your knowledge. And if you ever wanted to dive deeper, you could do so in these same topics. And yeah, therefore, like I think it's a great way to learn in 2025. So let's try out Grok and see what Grok has in store for the same topics. Jumping into Grok now. Let's dive into financial accounting fundamentals, specifically understanding financial statements. This is a foundational topic from the CIMA certificate in business accounting. I'll break it down clearly step by step and use examples to make it practical and engaging. And by the end, you'll understand the key financial statements, what they show, and how they're used in business. What are the financial statements? Financial statements are formal records that summarize a business's financial performance and position. They're like a report card for a company, showing how it's doing financially. The three main ones you'll encounter are income statement, also known as profit and loss statement, balance sheet, also called statement of financial position, and cash flow statement. These statements are prepared using accounting principles like accrual accounting and are used by managers, investors, and regulators to make decisions. Number one, income statement. What it shows. How much profit or loss a business made over a specific period, example a month, quarter, or a year. The key components: revenue, so sales, money earned from selling goods or services; expenses, the cost incurred to generate revenue, such as your rent, the wages, the materials; and profit or loss, revenue minus expenses. Simple example. Imagine you run a coffee shop for a month. You sell $10,000 worth of coffee, which is your revenue. You spend $4,000 on coffee beans, $2,000 on staff wages, and $8,000 on rent, which gives a total expense of $7,000. So your profit equals $10,000, which is your revenue, minus $7,000, which is your expenses, which gives you $3,000. And the formula is as follows. Why it matters. It tells you if the business is making money from its core operation. In CIMA, you learn to analyze this to spot trends or inefficiencies. Now we move on to the balance sheet. What it shows. A snapshot of what a business owes, and is worth at a specific point in time. Example, December 31st, 2025. Key components. Assets. What the business owns. So these are your cash, equipment, and inventory. Current assets. So assets can be broken down further into current assets, which is turned into cash within a year. So cash, accounts receivable, and non-current assets, which are your long-term items. So buildings and machinery are a few examples. Liabilities. What the business owes. So these are loans and unpaid bills. So this again can be broken down into current liabilities and non-current liabilities. So the current liabilities are due within a year, so your short-term loans. The non-current liabilities are due later, which are your long-term loans. Equity. The owner's stake in the business. So this is asset minus liabilities. So this comes back to that same equation where assets equals liabilities plus equity. We have a simple example here. So your coffee shop on December 31st. You have assets which are $5,000 in cash, $10,000 of equipment, and $2,000 in inventory. So this gives you a total of $17,000. Your liabilities, which is $7,000 in bank loans. So what is your equity? Equity equals assets minus liabilities, if you take from that above equation, right? So $17,000 of total assets minus $7,000 of liabilities, you have $10,000, which is your investment plus retained profits. Why it matters? It shows financial health. Can the business pay its debt? Is it growing? And in CIMA, you'll use this to assess the stability. Now we move on to cash flow statement. What it shows: how cash moves in and out of the business over a period, focusing on where cash comes from and where it goes. The key sections: operating activities, cash from core businesses, example, selling coffee. Investing activities, cash spent on receiving or cash spent or received from assets. So this includes examples such as buying equipment. Financing activities, cash from loans or owners. This includes an example of repaying a loan. A simple example once again, going back to our coffee shop in a month. Operating cost is $8,000 from coffee sales minus $6,000 in expenses, which gives you $2,000. Investing, spent $1,000 on a new coffee machine, so you subtract $1,000. Financing, repaid $500 of a loan, so again minus 500. So the net cash change equals the $2,000 profit minus $1,000, and which is your investing money for the new coffee machine, and another 500 taken off for financing where you repaid a loan, which gives you a $500 increase. Why it matters? Profit isn't the same as cash. A business can be profitable but run out of cash if it's tied up in inventory or unpaid bills. CIMA emphasizes cash management for survival. How they connect. The income statement feeds into the balance sheet. Profit increases equity via retained earnings. The cash flow statement explains changes in the balance sheet's cash balance. Together, they give a full picture, which is your profitability, the financial position, and the cash health of a business. So now we move on to a real world example. Think of a company like Starbucks. Income statements show revenue from coffee sales and the cost like staff wages. The balance sheet lists its stores, which are assets, loans, which are liabilities, and shareholders' equity. And lastly, cash flow tracks cash from sales, spending on new locations, and dividend payments. So now again, Grok provides us what more it can teach us, and so here's what Grok could teach us more. Walk through examples. I can create a fictional business, example a bakery, and build its financial statements with you. Explain terms confused about accounts receivable or depreciation. I'll clarify. And practice questions. I can give you scenarios. So example, a company has $50,000 in revenue and $30,000 in expenses. What's the profit? And guide you to the answers. CIMA context. I can tie this to a BA3 exam prep, like how to record transactions or adjustments. And yeah, so then it provides like a quick question to test our understanding. So business has $20,000 in sales, $12,000 in expenses, $5,000 in cash, and a $3,000 loan. What is its profit and what is its equity? So I think once again, it's kind of good that we analyze both ChatGPT and Grok to kind of teach us this subject. It's almost like a doubling of knowledge, but also they do things in two separate ways almost. Although it's like similar terms that they use, but I feel like Grok again, I find it easier to understand, maybe because it's more analytical, whereas ChatGPT is kind of easier to read through. Um, yeah, so I think we're gonna continue this um, yeah session with the different topics that I mentioned before, and before we go out for today, let us just see what Grok can do to help us with this first step, just to see how AI could be used to like further kind of exemplify your queries and further like if you're curious for more examples and how things work, how AI could be used in that sense so you could learn further. So let's just try this first point that Grok has brought. So it's a walkthrough example. So we'll be back once the answers are out. All right, guys. So coming back to that same point that we asked from Grok, I was just curious on what business it would create and what kind of, I guess, things it can teach us further on this same topic. So let's jump right into it. Let's walk through an example by creating a fictional business. A bakery called Sweet Rice Bakery, and building its financial statements together. I'll guide you step by step to create an income statement, balance sheet, and cash flow statement, explaining each part as we go. This will give you a hands on feel for how these statements can work and connect, aligned with fundamentals of financial accounting you'd encounter in a course like CIMA BA3. Scenario: Sweet Rice Bakery. It's April 30th, 2025, and Sweet Rice Bakery has been operating for the month of April. Here's the basic info we'll use. Sells bread, cakes, and pastries. Started the month with some cash, equipment, and a small loan. Had sales and expenses during April. Let's assume the following details for the month. Sales $15,000 from selling baked goods. Expenses $6,000 for ingredients, $2,000 for staff wages, and $1,000 for rent, which equals to $9,000 in total. Assets at the end of the month: $4,000 in cash, $8,000 in equipment, and $3,000 in inventory in unsold breads and cakes. Liabilities: $5,000 bank loan, and your cash transactions. So, bought $2,000 of new equipment mid month, repaid $1,000 of the loan. Now, let's build the financial statements. Income statement. What's the purpose again? Shows profit or loss for April 2025. Here are the steps. Revenue, money earned from sales. Expenses, costs to run the bakery. And profits, revenue minus expenses. Right? So, here is the statement that the example statement we've been provided. So, your revenue again, $15,000. And your expenses are your ingredients, which cost $6,000, the wages you paid, which is $2,000, and the rent, which is $1,000, right? So the total expenses is $9,000. So to calculate your profit, you need to subtract the expenses from the revenue. So $15,000 minus $9,000, which gives you a profit of $6,000. This is what's left after covering your costs, right? And so what does this say? Purpose: shows what's the bakery's financial position on April 30th, 2025. Assets: what the bakery owns. Liabilities: what it owes. Equity: the owner's stake. Assets minus liabilities. Sweet Rice Bakery balance sheet. Okay. So I think this is the same breakdown that we can see here. So assets, which are your current assets. So you have cash of $4,000. So that comes from, once again here, assets at the end of the month. So $4,000. And your inventory, which is $3,000. And your non-current assets, which are your equipment, for $8,000. So the total assets you have is $15,000, right? So then we move on to our liabilities, which is that $5,000 bank loan, right? So that's all the liabilities we have for the month. So to get our equity, you need to, so again, going back to that equation, assets equals liabilities plus equity. So to get equity, you need to do assets minus liabilities equals your equity, right? So $15,000 minus $5,000, which gives us an equity of $10,000. And here is Grok kind of giving us a breakdown of how this works. So assets of $15,000, which includes $4,000 cash, $3,000 in unsold goods and inventory, and $8,000 in ovens and mixtures. Liabilities, which is the $5,000, and your equity, which is $10,000. And now we move on to the cash flow statement. The cash from operating activities, so your cash sales of $15,000, the cash expenses of $9,000, which gives a net cash from operations of $6,000. The cash from investing activities, so your equipment purchased, is $2,000, which gives a net cash of negative $2,000 from investing. The cash from financing activity, so your loan repayment, you did a $1,000 loan repayment, which gives a net cash of negative $1,000 from financing. So the net increase in cash then becomes $3,000. How do we get this? $6,000, which is the net cash from operations, minus $2,000 and a minus $1,000 from financing, which gives you $3,000, which is the net increase in cash. So I think that's pretty much what we have. And this once again provides us kind of a explanation, and then lastly how they connect. So okay, let's move on to this. I think this is quite relevant. So how they connect: the income statement, which is, okay, let's just make this bigger. That does not change much. Okay, how they connect: the income statement feeds into the balance sheet. The $6,000 profit increases equity, assuming it's retained in the business. The cash flow feeds into the balance sheet. The $3,000 net cash increase explains how cash went from $1,000 to $4,000. The big picture: the bakery is profitable by $6,000, has a solid position, $15,000 in assets, and is managing cash well as it ends with $4,000. So let's reflect. Here's what we've built for Sweet Rice Bakery. Income statement shows a $6,000 profit. Balance sheet shows $15,000 in assets, balanced by $5,000 in liabilities and $10,000 in equity. Cash flow statement shows $3,000 in cash, increase ending at $4,000. So once again, you can kind of dive deeper and see what else you can explore on this topic. So questions that Grok has pre-listed here are: does this make sense so far? Any part you'd like me to explain more? And for example, why inventory is an asset or how cash differs from profit. Want to tweak the scenario, example, add more sales, a new loan, or depreciation on equipment. And if we are ready for a mini challenge, I could give you new numbers and let you try building one of these statements, right? So I think this is a good place to stop for this video, and we will be back with another video on the topic of accounting ratios and interpretation. And like I said, I'll keep exploring these different topics that AI could be used for. I think CIMA is a very, very valuable skill set we could kind of, it helps us develop. So I think we will keep this set of videos going, and we'll catch you guys with the next one. Cheers.